Hi, and welcome to this presentation on homeowners insurance. My name is Patricia Dorn, and I'm with the Maryland Insurance Administration in the Consumer Education and Advocacy Unit. This presentation does not provide legal advice. You should discuss specific questions with your trusted financial advisor or insurance producer. So, what is the Maryland Insurance Administration? The Maryland Insurance Administration is the Maryland state agency that regulates insurance in Maryland. And what that means is the MIA licenses insurers and insurance producers. And the insurance producers are the agents and the brokers. We examine the business practices of licensees to ensure compliance, so we make sure that they follow the laws. We monitor the solvency of insurers, and that's where we make sure that they have the money to pay claims. And we review and approve the insurance policy forms, as well as reviewing insurance rates to ensure that insurance rates are not inadequate, excessive, or unfairly discriminatory. And we also investigate consumer and provider complaints and allegations of fraud. Throughout this presentation, you're going to see links to videos. I won't be showing the videos today, but you can find those on our YouTube page. So if you feel that your insurer or insurance producer acted improperly, you have the right to file a complaint. Examples of improper action include improperly denying or delaying payment of all or portions of a claim, improperly terminating or canceling your insurance policy, raising your insurance premiums without proper notice, making false statements to you in connection with the sale of insurance or the processing of insurance claims, and overcharging you for services, including premium finance charges. So let's talk about homeowners insurance. What is homeowners insurance and why do I need it? Homeowners insurance can help you manage the financial risks of home ownership. Homeowners insurance may help you recover financially following a covered loss to your dwelling, your personal property, and other structures. And it also may protect you financially if someone is hurt or their property is damaged because of something you did or something that happens on your property by providing liability coverage and or paying for medical payments. There are different types of homeowners policies. The policies have various names depending on the insurer that sells them. However, standard homeowners insurance policies are often referred to as HO2 broad form, the HO3 special form, HO4 renters, HO6 condominium unit owners, and the HO8 modified name perils form, which is commonly used for older homes. And more information can be found in our guide, A Consumer Guide to Homeowners Insurance, which is on our website. So what are the basic parts of a homeowner's insurance policy? The terms and amount of coverage for a particular loss will depend upon the terms of your policy. Generally, homeowners policies include the following parts. So for starters, dwelling coverage, so your home. This provides protection if a covered peril damages or destroys your home. And I'm going to talk to you real quick about what a peril means. Next slide real quick. So a peril. It's important to understand the definition of this word when you're understanding your homeowner's insurance policy. So homeowners insurance policies protect you from loss, damage, or injury due to covered perils. Covered perils are causes of loss. So your policy may cover named perils only. So named perils, a list of perils. such as fire, windstorm, hail, vandalism, or theft. Or your policy may be an open peril policy, which is also sometimes called an all-risk policy. And that means there's not going to be a list of named perils, but it covers all causes of loss unless the cause of loss is specifically excluded. So there's going to be a list of things that are excluded. And it is possible that a policy may also be a combination of both. Back. So back to the basic parts of homeowners insurance. Dwelling coverage, your home, other structures. That's going to be protection if a covered peril damages or destroys detached outbuildings and structures, like fences that are not part of your dwelling. Personal property, so your contents in your home, provides protection if your personal property is lost, damaged, or destroyed by a covered peril. Additional living expenses, ALE. This may pay for additional expenses you incur when you cannot live in your home because of damage or loss that is covered by your policy. Generally, coverage will only pay for living expenses that are not normal and customary. Liability coverage may provide protection if you or a member of your family are legally responsible for an injury to another person or cause damage to another person's property. And medical payments. This provides payment up to a specified amount for reasonable and necessary medical expenses incurred by people injured in an accident in your home, regardless of fault. This does not apply to you or members of your household. This provision will pay covered medical expenses for a minimum of up to 3 years from the date of injury or accident. And so again, peril. Remember, a peril is a cause of loss. Next slide. So what are the basic parts of a homeowner's insurance policy? There's a few more that I want to talk to you about. Trees, shrubs, and plants. This part of your policy provides limited protection against damage to greenery on your property. The coverage on trees, shrubs, and plants is provided only against certain perils and may have a dollar limit as well. For example, damage to greenery caused by windstorm or ice is not usually covered, even if you buy an open peril policy. Debris removal. This part of your policy generally pays to remove debris of damaged property following a covered loss. Your policy may also pay to remove fallen trees that cause damage to your covered property. And it's important to remember that even if the loss, damage, or injury is covered by your policy will only pay up to the policy limits that you purchased. So what about the coverage options? What coverage options do I need? Well, you need to ask yourself, do I want replacement cost value or actual cash value for your belongings? And I'm going to talk in detail about all these things. Do you need additional coverage for valuable belongings? What deductible should you choose? How much liability coverage? And what about water sewer backup and building ordinance coverage? So I'm going to start with helping you understand the difference between ACV and RCV. So that's actual cash value and replacement cost value. And this is, these are your contents in your home. Actual cash value is the cost to replace your damaged property with like, kind, or quality minus depreciation for age and use. So for example, if you have a table that you paid $100 for 10 years ago, and it was destroyed in a fire, and you have an actual cash value policy, maybe that table was worth $80 before it was destroyed in the fire, and your insurance is going to pay you $80 for that. With replacement cost value, it's the cost to replace the damaged property with like kind or quality at full cost without depreciation. So what that means is that $100 table that you purchased 10 years ago, it costs $120 today, and you could get $120 potentially to replace that item. And now this is always less the amount of your deductible. So the amount of your deductible is essentially subtracted. It's important to remember that you may not receive the full replacement cost until you actually repair or replace the damaged property. Coverage for certain types of personal property may be capped at lower limits. So for example, something like jewelry may have a $1,500 limit in your policy. If you keep things that are particularly susceptible to loss, like cash, securities, jewelry, furs, manuscripts, stamps, just collections, then you may need to increase the included limits at additional cost. Additional amounts of insurance can be purchased separately, and you do need to talk to your insurer or your insurance producer. And again, the producer is your agent or your broker. So talk to them about information about scheduling valuable items separately, and talk to them about the cost of the additional coverage. Another one is water and sewer backup coverage. So water that backs up through sewers and drains, when this backup is not due to the negligence of the insured, is typically not covered under a standard homeowner's policy, but you can purchase water sewer backup coverage. This coverage protects your home when water overflows a sump pump or sewage enters your home through pipes designed to carry it away. Most insurers offer several different coverage limit options. Ordinance or law coverage. It's important to be familiar with your local building codes. If your home is damaged during a disaster, you may be required to perform expensive upgrades to your property to comply with your county's current building codes. So ask your insurance producer if the insurer offers building ordinance or law coverage. A very important thing to understand, and to understand thoroughly about your homeowner's insurance policy, is your deductible or your deductibles. In some cases, you may have just one deductible to understand on your policy, but in many, there's going to be two. So you have many options when choosing a deductible. If you choose a policy with a $500 deductible, then there must be $500 of covered damage to your home or personal property for each claim before you are entitled to collect any money from your insurer. Your insurer will deduct $500 from the total amount of covered damage. Higher deductibles generally reduce your premium. You can choose a deductible that you will be able to afford to pay out of pocket if you have a claim. You can ask your insurer or your insurance producer how much your premium will be reduced by increasing the amount of your deductible. But remember, make sure that it is a deductible that you could actually afford if you did have a covered loss. So this is really important. In Maryland, some homeowners policies contain special percentage deductibles for losses caused by specific perils, such as wind, hurricanes, or other storms. And so if your policy contains this percentage deductible, it's also going to tell you what perils would cause the special percentage deductible to be put in use. So it might say wind, it may say wind, hurricane, and hail. And you just need to look at your policy and understand the perils in your policy, the covered perils in your policy. So the insurer may automatically include these deductibles. So this second deductible may automatically come with your policy, or it might make it available at the option of the policyholder. Always ask your insurer or your insurance producer if your policy has a flat deductible or a percentage deductible. Percentage deductibles are based on your dwelling coverage limit, not the amount of your loss. And that's a pretty confusing sentence. So here's an example. If your dwelling is insured for $100,000 and your policy states that it has a 2% deductible for certain perils, and let's say you had a fire, your deductible would be $2,000. So just remember that that percentage it's not a percentage of the loss. So let's say that this fire caused $10,000 worth of damage. This 2%, it's not 2% of $10,000. It's 2% of the amount that your dwelling is insured for. And so for another example, if your dwelling was insured for $400,000 and your policy has a 2% deductible for certain perils, then you would be looking at a deductible that was $8,000. It's just very important to understand the deductibles that are in your policy so you can be prepared if you do have a loss, or so you can shop around for a policy that suits your needs a little bit better, or call your insurance or insurance producer and see what you can do with the policy that you have. So what factors affect the cost of my homeowner's insurance policy? Well, prior claims. Some insurers may review not only your loss history, but the loss history of the property when making a decision on whether to insure you. Some factors they may use to quote premiums using prior claims are the dates of those prior claims, the nature of the claim, and the amount paid by the insurer for the claim. The construction of your home will affect the cost of your homeowner's insurance policy. So is it frame, brick, modular? The age of your home and the age of the home systems, like the electrical and plumbing and HVAC and the roof. The access to and quality of local fire protection, and then various discounts that you may qualify for, including deadbolt locks or alarms and having multiple policies with the same insurer. What about things that aren't covered? So most homeowners insurance policies exclude the following types of losses. Most homeowners policies exclude mudslide, earth movement, so that's an earthquake, groundwater or seepage, and flood. I will talk to you a little bit about flood. We'll go into this a little bit, but just know that we have a lot more resources that go into it in even more depth on our webpage. So flood insurance may be available as an endorsement to your homeowners, renters, or condominium insurance policy, or as a separate policy. While some insurers offer flood policies, flood insurance can also be purchased from the National Flood Insurance Program, the NFIP. And for more information, you can visit floodsmart.gov. So flood insurance, even if your home is not in a flood zone, you may still be at risk for flooding. Most claims under federal flood insurance policies involve homes that are not located in a high-risk flood zone. Flooding can be caused by heavy rain, which has occurred recently in Baltimore City, as well as Baltimore County, Frederick, and Howard County. Flood insurance is offered through the federal government's National Flood Insurance Program. And again, floodsmart.gov if you want to go ahead and find out more about it and look at your home's risk. You can put in your own address there and you can look at your risk. There is a 30-day waiting period. The National Flood Insurance Program includes a 30-day waiting period for new or modified flood policies. Standard flood policies from the NFIP cover direct losses caused by flood, subject to the policy terms and conditions. And two types of coverage are available under the NFIP standard flood policy: structural and contents. Structural coverage in flood insurance covers damage to walls, floors, insulation, furnace, and items permanently attached to the insured structure. And the coverage is up to $250,000 for residential buildings. And for contents coverage, that's the coverage for your personal property. And that coverage is available up to $100,000. Basements are any area of a building with a floor that is below ground level on all sides. So basement items covered by flood insurance include unimproved structural parts, so the walls, the foundation, and utility connections, essential equipment such as sump pumps and air conditioners, water tanks, furnaces, and the cleanup. But some basement items are not covered by flood insurance, and that's going to include basement improvements. That's going to be finished walls, floors, or ceilings, and personal belongings that are kept in a basement. So again, that was just a brief review of flood insurance. If you do have more questions about flood insurance, please visit our website, insurance.maryland.gov, or you can visit floodsmart.gov as well. So how much coverage do I need for my household property? So for the things that are in your house, that's going to depend on the value of your personal property. You should start by making an inventory of your personal property and determining the value of that property. And here we have a link to a video that's on our YouTube page called Creating a Home Inventory. It is very important that you make and maintain a home inventory. If you do have a covered loss and your personal property is damaged or destroyed, you will need to give your insurer a list of those items. So group the items together in logical categories or room by room. And don't forget rarely used items. You can just photograph or videotape each item or room. Don't forget about the things that you're storing in drawers. Don't forget about your closets. Store your home inventory and related items, such as sales receipts or appraisal documents, in a safe place, such as in the cloud or in a fireproof box or a safe deposit box. An updated inventory can also make it easier to file an accurate, detailed insurance claim in case your personal property is damaged or destroyed by a covered loss under your policy. And now I'm going to introduce you to a rate guide. This is the rate guide for homeowners insurance that the Maryland Insurance Administration publishes every 6 months. So comparison shopping is the key to getting the most out of your insurance dollar. Here's some tips for getting the most out of insurance shopping. Make sure that you provide the same information to each insurer or insurance producer. So make it an apples to apples to apples comparison. Ask about discounts. Don't forget to ask about them. Ask about the deductibles and when they apply. Very important. Ask about what is covered and ask about what is excluded. In addition to price, you may want to consider factors such as coverage limits and customer service. And you can ask friends and neighbors about their experience with different insurers. So this consumer guide should be used for educational purposes only. It is not intended to provide legal advice or opinions regarding coverage under a specific insurance policy or contract, nor should it be construed as an endorsement of any product, service, person, or organization mentioned in this guide. This is the cover of our rate guide, Homeowners and Renters Insurance, a comparison guide to rates. And this is available on our website. You can look at it there, or you can download it from our website, or you can give us a call and you can request that we snail mail a copy of it out to you. And so I'm going to show you how to use it. So when you open it up, it's a little bit less confusing to you because there's a lot of numbers. There's a lot of tables. And one of the first things that you're going to see is, and I know that this is a little bit hard to read on the next slide, I zoom in to make it a little bit easier. But what you're going to see is this list, counties and cities, and then different home values. And you're going to start out by finding the scenario here that closest matches your own situation. And there's going to be several pages. This is just a snapshot of one page. There's 4 different pages for you to look through and sort of find out, you know, which one looks closest to yourself. So here I've zoomed in to make it a little bit easier for you to read, and so I can explain to you what you're actually going to be looking at. And so in that first column is the county or city. So let's say that I'm someone in Allegheny County and then in Cumberland, and my home is valued at about $118,000. Maybe it's a frame house. And then the next column there is protection class. And so protection class is going to be a 1 to 10 number, which represents the distance to your nearest fire department or hydrant and the quality of that fire department. And so each one of those houses is going to have a number from 1 to 10. You're not going to have to know the protection class for your own home. Your insurer or the insurance producer should be able to have that number available. The next column is where you choose your deductible. In this case, we've chosen a $500 deductible for the scenario. It's a 35-year-old house. They are going to purchase water and sewer backup with a limit of $15,000. In this case, they do have an auto and home discount. So that means in this scenario, this is a person who is bundling their auto and home. So they have their auto and home under the same insurer. And they have $100,000 of liability protection. And then you're going to see the rates. And this is, again, I know there's a lot of numbers here and it might be a little bit difficult to see on the screen, and I'll zoom in on the next page, but this is what you're going to see. It's in alphabetical order. The insurers are on the left. And this page ends at M, so it's going to be 2 pages. And if I look down at my Allegheny column, those are the different rates for that exact same scenario from company to company. So just know they're not averages. This is an exact rate for that exact situation. You're not going to find your exact situation in the rate guide, but what you want to do is find the scenario that is closest to your own homeowners or renters situation. And here I've scrolled in again, so you can see the insurers are listed and the different counties. So Allegheny County, and you can see that there is variance from company to company with regards to the rates that they're charging for what is essentially the exact same product. And just know that these rates are updated in the rate guide every February and August. So if you get February's, you can certainly ask for August as well. In there, we have a policy comparison worksheet. So in the rate guide itself, we made this policy comparison worksheet. It's several pages long. And the idea is that it helps you organize yourself while you're shopping for homeowners insurance. So if you've gone through your column and you've chosen 3 companies that you want to call, you can put the insurer's names at the top and then use this guide to remind you to ask questions and just keep track of all the information that they give you. So when you're done making all the calls that you're planning to make, you can step back and compare the companies and make a decision. Next slide. So this brochure is available at Renters Insurance, a comparison guide to rates on our website. Or you can call us at 800-492-6116 to request a copy. The insurer phone numbers and the websites are all available in the back of the book. And so for the most part, if you choose the companies that you want to call, you should be able to find all of their contact information in the back of the book. All right, let's talk about just a couple other things. So lenders, the person who has lent you money, if you have a mortgage, your lender, they can force place property insurance coverage on your home. It's just something to be aware of. So if you finance the purchase of your home, your lender is going to require that you carry insurance on that property. So if you don't do this yourself, if you don't purchase the insurance, your lender may force place that coverage on you. And it's just something to be aware of, because if this has happened to you, you might think, hey, I'm done. You know, I have this force place policy. But this is just to tell you, the lender obtains insurance on the property and they require you to reimburse them for the costs of premiums paid, more or less in the same way as if you had your own policy. Force-placed property insurance coverage generally protects only the interests of the lender and not you, the property owner. So if you have a force-placed policy, you may want to look into it because possibly you don't have any coverage for your contents and things like that. It's just something to be aware of. If you have a force-placed property insurance policy, you really need to look into it and consider shopping around for something that works better for you. In some situations, people contact us at the Maryland Insurance Administration who are having problems obtaining a homeowner's insurance policy. And that can be for several reasons. You know, it could be issues with the home, or it could be that they had a lapse in coverage. So if you've been turned down by one insurer, so if one insurer says no, we do recommend try obtaining coverage through another insurer. Don't assume that you'll be turned down by all insurers. Just as insurers have different premiums, they also have different underwriting requirements. So call around and keep trying to obtain an insurance policy. However, if that doesn't work, if you are unable to obtain insurance for your home from a private insurer, limited insurance protection may be available to you through the Maryland Property Insurance Availability Program. I have that information up on the screen here. And then that information is also available on our website, and it's in our a consumer's guide to homeowners insurance. So if you don't have a chance to jot this down, you'll find it in a consumer's guide to homeowners insurance on our website. And just in summary, here's some tips. Make sure your dwelling policy limits, so dwelling, that's your house, and so they're at least 80% of the replacement cost of your home or more if required by your insurance policy. Know the difference between ACV and RCV, so you probably do know the difference by now. And ask if you should list and separately insure valuable items of personal property on a personal property schedule. Ask about additional coverages like sewer and drain backup and ordinance and law coverage. Choose the best deductible for you and understand the difference between flat and percentage deductibles. Understand the difference and understand what's actually in your own policy. Look for language in your policy about vacant or unoccupied property. So some policies have language that may prevent receiving payment for a claim if the property is left vacant or unoccupied. Read your policy for clauses. In general, just make sure that you've read through your policy carefully. Be prepared. So we discussed this already, but create an inventory of all of your possessions and keep it updated. Photograph or video each room and the exterior of your home, and safeguard your records. So safeguard your insurance policies, safeguard your inventory list. Keep your insurance professional's name handy and the telephone number and the policy number, and know how to shut off the gas, the electricity, and the water in your home. Be prepared to board up vulnerable places around your house. If you do have a loss, contact your insurer promptly. Take photographs or video of the damage. And before you remove any damaged property, make sure an insurance adjuster or your insurance producer has seen the damage. As soon as possible, prepare a detailed inventory of all damaged or destroyed property. Again, easier if you already have the list. Give a copy to the insurance adjuster and keep a copy for yourself. It should include a description and the quantity of the items and the date of purchase and their approximate age or other proof of ownership. Keep all receipts for emergency repairs you may have had to do. Be present when the insurance adjuster inspects your property. Do not accept an inadequate settlement offer. Cashing a check may bar you from seeking additional compensation. Confirm in writing that it will not. If your insurer denies any part of your claim, be sure they put the denial in writing and keep all the paperwork. Filing a complaint with the Maryland Insurance Administration. If you feel that your insurer has acted improperly, as we discussed at the beginning, you have the right to take action by filing a complaint with the Maryland Insurance Administration. However, some disputes may be governed by your policy's terms and may not be a problem the Insurance Administration can resolve for you. Complaints must be received in writing. Please provide as much detail as possible, including copies of pertinent documents. A trained professional investigator will handle your complaint. The investigator will contact the insurer or your insurance producer to try to resolve the issue. And meanwhile, you will be advised of the steps taken on your behalf. Complaint files are not closed until the Insurance Administration has made a determination regarding the complaint. The Maryland Insurance Administration has also established a rapid response program designed to help certain consumers resolve property and casualty claims. So homeowners insurance is a property or casualty claim, to resolve them quickly and without having to file a formal written complaint. For more information, our phone number is here. The rapid response program is 410-468-2340. Participation in the rapid response program is voluntary, and it does not affect your right to file a formal complaint. And then also down here, if you go to our website, insurance.maryland.gov, and you want to file a complaint, you go under consumers, and then you can click on file a complaint. So again, inventory, we can't stress it enough. Photograph each room, safeguard your records, and keep that insurance producer's name and telephone number handy. Additional resources, if you want to reach out, if you want to find out more information about flood insurance or reach out to them, that information is listed here. The Maryland Emergency Management Agency, contact information is here. That's MEMA. and the Federal Emergency Management Agency, FEMA. Their contact information is here as well. So contact us. We're here to assist you with all of your insurance questions or issues. You can contact us to verify the insurer or insurance producer you select is authorized to sell insurance in Maryland to protect yourself from fraud. And here's our contact information. And you can visit us at www.insurance.maryland.gov. Thanks so much.